In today's video, I will be breaking down a trade I took this morning, and I will be explaining my risk management. I will be explaining why I took the trade, what indicators led me to take the trade, and my strategy that I used to manage my risk in this trade, which is basically going back to it, risk management, and explaining market conditions as I did take this trade later in the day. And here is the live clip from the actual trade. I was trailing it, as you can see, and this is on a real account, real money, live account, and it was a beautiful continuation trend trade. As always, we are still in an up market, no matter how sideways the market is going to get, and I will be explaining market conditions today too, as they got very sideways in the beginning. There was one good trade, but it was an aggressive long trade. This one was more of a safe, more of a safer trade to take, which did work out in the end. Got 30 points off this trade. I entered with 3 MNQ contracts, took one off at 10 points, took one off at 11 points, and it took another contract off at 10 points. So a total of 31 points to be exact, 10 points for 2 contracts and 11 points for 1 contract. And we had a closed PL of $62.50. If this was on NQs, this would have been a $620 trade, probably even more, since NQ is 10 times MNQ. And if this was a 10 contract trade, this would have been $6,200, probably $6,100 because of fees, but that doesn't matter when you're making that much a day. And let's get into the breakdown of the actual trade. So here we are on the higher time frame. Like I said in the previous video, it was either going to go down to this fast moving average, act as support, or continue forward, which it did. It retraced from the shorts that happened yesterday in the previous video. Even though in the previous video was a sideways market, we still had our long trend trade, which worked out really well. Here we had our long trend trade, which worked out really well, but in the morning of the market, it was a continuation of the sideways market from previous day, but market retraced itself, kept pushing higher. Same thing on the daily, retraced itself, and it had the fast moving average as support, like how I explained in the previous video. We're gonna have that fast moving average as support. It's either gonna hold, shoot up, or not hold and break down, but it held and shot up, which is our expectations from the market recap videos, that it is going to go higher to this 703 level, either shoot down because of the divergence that is happening, or break out of the 703 level, which this divergence will basically be irrelevant at that point, and it retests back into this 703 level, which will now act as a level of support and shoot back long. Same thing over here. You can see that the divergence is happening, but if you look at it, the momentum on the oscillator is slowly, gradually creeping up. Same thing on the weekly, slowly, gradually creeping up. It's not as strong as before, the divergence that is, happening. But as expectations are, it's long. We are still in a long trend, and the oscillators are showing a stronger movement upward, indicating that that divergence might not be here anymore, but we'll see after it hits the 703 level. And let's go on the 1 hour. Here we are on the 1 hour time frame. If you look at the 1 hour time frame, the previous high, it almost hit it, but this is aftermarket. Let's go to our intraday market, which is over here at 7 o'clock, which is the opening range, and we took our trade around here at 11:12ish, and it was the retracement off the fast moving average. It was a beautiful trade. Over here on the 15 minute, I really didn't look at it, so we're just going to ignore the 15 minute today because I didn't look at it to take any of my trades today, which I only took one trade. So 15-minute irrelevant for today, 60-minute and the 5-minute, 2-minute, and 1-minute were the ones that led me to take the trade. So 60-minute, we had the support on the fast moving average. They were chased off of it and went up. Here we are on the 1-minute, the 2-minute, and the 5-minute. The 1-minute, I marked out this 784 level, which, as you can see previously, it went up, went back down, touched it again, went back down, touched it again, and kind of went back down, kind of moving around the fast moving averages. Then it touched it again, had a crossover this time, unlike the other times where it touched. It had a crossover, really strong crossover. We had momentum on the oscillators. Same thing with the 2-minute. We had momentum on the oscillators, and the 5-minute, we had a re-entry signal on the 5-minute. So we had all our indicators indicating it was gonna break out of this 17,484 level, which we got in on the 17,484 level, and it shot up. We followed our strat, had our risk management, came back down, but it's a good thing we took ourselves out for 30 points, came back down, and that was it for the trade. And everything here is just aftermarket. We didn't capture all of this aftermarket moves, but because my strat is I don't trade after 12. Usually that's when it gets very, very too volatile to trade. But in this case, it worked out, since in the morning it was very sideways. In the morning, it was a very sideways market. It didn't know where to go, what direction to go. It had a really good trade here, but this was an aggressive trade, which I didn't take because I didn't know if it was going to come back down rapidly. But it was over here too on the 5-minute. Very aggressive trade. And that's basically that trade, which would have worked out, but didn't follow my strat. The one that did was over here. Same thing on the 2-minute and on the 5-minute, everything lined up. This was a more safer trade, which worked in our favor. And over here, same thing. On the 5-minute, you can see bounce around this level, break out, took the trade. 2-minute, bounce around the level, broke out, took the trade. We could have held on to it for another hour, but our strat is to take 2 contracts off at 10 points, but we took one off at 10, one off at 11. Yeah, that's basically how we took the trade. We had the oscillators, indicators working in our favor, everything lined up. We had the bounce around the level, which was a very strong level we marked out, and we just took the trade, got in it. Pretty sad we didn't take this trade, but it is what it is. You know, I'd rather take a trade that's in a safe environment, safe condition, in a trendy condition, where all time frames, the 1-minute, 2-minute, 5-minute match up, than just having one of the time frames match up. So that's that, and that's basically the trade. For risk management, we saw that over here, this big bearish momentum shift come down, and it went back up, and then it went back down. So we took ourselves out when it came back down. Same thing over here. It had the retracement off that same level, so this level acted as support now. You can see it on the 1-minute, the 2-minute, and the 5-minute. Right over here, the retracement off this level. So we took ourselves out for a total of 30 points. We trailed ourselves because we saw this big wick right here on the 1-minute, and we're like, all right, we're gonna take ourselves out, or we're gonna trail it because we don't know if it's gonna come back down. Since all of today was a very sideways day, but we got our points, we got our profit, and like I said before, even though it's only $62, I'm just trying to be consistent with points. I got my points, this was NQ, it would have been $620. If it was 10 contracts NQ, it would have been $6,200. So like I said in the previous video, the only thing that matters is once you have a strategy down that you can consistently take points, all you do is just increase the contract size and you should be making more money. But it was a sideways market. It was slowly trending lower too. As you can see in the beginning, it started to slowly trend lower, came back up, had the 1 minute breakout. Very risky, aggressive trade would have worked, but then it went back down and then started trending lower again. As you can see here, same thing with the 2 minute, you can see it start to trend lower after it had that big move up. And on the 5 minute, same thing, trended lower. As you can see, this close created lower than this close, so an indicator that started trending lower. But the rule is to go long, the exception is to go short. If you take the exception instead of the rule, you will not be a successful trader. Shorts did work somewhat, but don't take the shorts because they are an exception. Exception is always a counter trend trade, not in ideal market conditions. But even in crappy markets, you can still get your profits and trade, because trend trading is the key to success in trading. Trend trading is the key to success in trading, as even in this crappy market, this really crappy market, you had one trade over here which was aggressive, you could have taken. You had one trade over here which was also aggressive, the safest trade over here, and it was a trend trade, beautiful, matched up with all the indicators, and it really shot up after. And that's basically it, how I took the trade. I explained my risk management, I explained my strat, and I explained how every indicator matched up on every time frame, the 60 minute and the weekly and the daily. So everything was perfect for this trade. Got 30 points, 10 points per contract, and like I said before, contracts are the only way you're going to make money, but being consistent with your points is the only way you're truly going to be successful and truly make money. Because if you're not consistent with your points, how are you going to increase your contract size to capture more profit? So that's basically it. Make sure to like, subscribe, and I'll see you guys on the next one.